Steve, join us now to talk about a lot of these issues, the market impact of the economic turmoil that we're seeing. Is Noah Blackstein, Vice President and Portfolio Manager at Dynamic Fund. So did you feel like talking during that when Steve and I were talking? You could have just piped in, Noah. What are your comments on that discussion we just had? What do you think?
Well, I mean, to the extent that, how much of if the pandemic did anything, it paused sort of what was going on today in the overall economy. But a lot of the areas that are showing weakness or have had difficulty, especially in malls and retailers, they were in trouble before this whole pandemic started, whether it was a shift to e-commerce or even foot traffic in the malls. So to the extent that some of these areas that were in trouble before the pandemic accelerated through it, I think that's kind of what happened. But I mean, a lot of the economic data is terrible, but it's government-induced terrible by shutting the overall economy down. And so, the able to reopen is important, and then the willingness of consumers to re-engage. I think there's some uncertainty around how willing consumers are to re-engage, but we're just going to have to see. I think that's going to weigh on some of the more troubled places like cruise lines and airlines and other things like that. And it's certainly going to be tough for mom and pop restaurants with all the rules and capacity. I mean, I don't think restaurants can operate at 50 or 60% capacity, but it's probably the most the opening line of Dickens' Tale of Two Cities, the most overused line in finance for think pieces. But it truly is. There are other places which are benefiting from what's happened, and other areas that are accelerating because of it. So, we're trying to figure out the areas to be involved with longer term, and some of the other areas were in trouble before, and that's this pandemic has just accelerated that.
So you heard some of the comments about just where earnings are, revenue, things like that. Will time take care of a lot of these concerns, do you think? Did the underlying economy catch up with the stock market? No, or vice versa?
Well, I did like the piece that was done likening the pandemic more toward a natural disaster. I think the example was Katrina and then the rebound in the economy. I do sort of feel that, we shut things down, and as things have begun to reopen, things are coming back for sure. Like I said, there'll be areas that are going to be more difficult to bounce back, and there were areas that were in trouble before, and it accelerated. I also think habits do change, and a lot of demand is getting pulled forward. We've heard from technology companies who, one technology company said digital transformation was accelerated by 2 years. I've seen other surveys saying it was 6 years. So, a lot of what's happened in the pandemic is changing habits, and a lot of things that people do are habitual. And some of these habits and some of these ways that people shop and the way people access data and where people work, they've likely been changed to some degree permanently.